The question we say tonight is, can Amazon and Apple keep that going when they report in just a few minutes? Doug Flynn joins us, certified financial planner and co-founder at Flynn Zito Capital Management. As always, welcome to Doug. We could talk, and there are headlines today. There's like a GM headline. There's plenty of negative headlines about the economy and the markets and everything. Tech, NASDAQ's having a good day. It's up a lot. We're getting back, not all the losses. We're getting back some of them. So what's going on? Some of these companies are coming in and maybe outperforming a little bit. I don't know if we'll see it again tonight, but what about last night?
Yeah, it seems like the forward guidance earnings, which everyone else has been really sort of downplaying and saying the tariffs are going to impact them. They're really downplaying that. The tech forward guidance has been better than expected. And if you take a step back, what it seems like is that if you really think about it, the AI trade really is not that tariff related. So I think when you look at it, you say, oh, so there's some opportunity in there. It's going to be a little less tariff related. So I can move that over there and really focus in on the company, its forward earnings and its guidance, and get back to like, okay, things aren't as bad for that particular sector with the NASDAQ. Yeah.
Okay, so last night it was Meta, and it was Microsoft again. And to go back to AI and the cloud business at Microsoft, particularly very strong, and the Microsoft stock price very strong today. So tonight we can talk about these companies that are coming out tonight after whether they can follow up on Microsoft and Meta as much. Apple's interesting because they are in the mix and they're trying to shift things around. The story about India. What do you look for from Apple? I wonder if they'll make any commentary on the trade stuff.
I think the key is exactly what we were talking about, is that not only do they have to come out with earnings, but it's the forward guidance. Again, read into that. They weren't as big into the AI as everybody else. They do have manufacturing issues with China and trying to move that. That's not something you can move in a day. So you would almost expect a little bit of a less good report from Apple than the rest, but that may be okay. But that's really what I'm looking for, is like, what are they telling me for the future? Are they going to downplay it like everybody else has been doing it, or is it going to be more of what the tech companies are doing of late?
What about Amazon? Of course, we were crazed about Amazon the other day with all the back and forth with the White House about whether they're going to put the tariffs on your receipt essentially on Amazon. But what about Amazon?
Yeah, so Amazon does have a very big cloud business as well, and so if they've done similar to Microsoft, they should have a really good impact on that. I mean, the tariff stuff is really for them to pass down whatever cost they may have incurred, so that people didn't think they were gouging. So that's really where that came from, to that small part of the business. But obviously that's by the wayside, and who knows if this is even going to get that far. We still really haven't had any material impact to any large degree on the consumer yet. So, they're trying to preemptively do it, like other charges, putting another line in there. Can make some sense, but I would be more focused in on that. Doesn't really affect their profitability in the short run. I'd be looking for the other parts of their business to do well.
Right. So the bigger picture, then, you bring it all together, because you're Mr. Perspective for us. You really are. Like yesterday, you were saying something like, for all the back and forth and for all the big declines that we did have in the stock market for a period of time, if you go back a year, still up 10%. Right, we're up 10%. You're basically saying that.
That's right.
All right. So what's the perspective on all of this? So again, we can find a lot of negative headlines today. The GM story, we talk about tomorrow's jobs report maybe, but what about the perspective on these tech companies? Does it tell us anything that maybe things are not going to be as bad as we thought, or?
I think it does. I mean, the GDP number, as you know, is really not, you couldn't really glean anything from it. And tomorrow's jobs numbers are really the first month's numbers since the April 2nd tariff issue all broke. But I don't even think that is going to have any real impact, because, okay, you're going to get some government layoffs from the Doge stuff, but the private payroll numbers are really what you're looking for. You have to parse that when you see the headline number. And I don't think tomorrow you even get, the plus minus number is that you're looking for is 133,000 there. So if it comes in less than 100,000, that's going to be an issue. But the tech companies haven't come out and said, hey, we're doing massive layoffs or anything like that that's impacted by the tariffs. None of that is even happening. So you almost have to segregate it. Look, those tech companies got beat up more than most of the other companies in the market. Some of them were down 30 or more percent when the market was down 15-ish, which right now the S&P is only down 5% and the NASDAQ's only down 10. And I say only because we're acting like, this is the biggest bear market ever. but we're only down 5% on the market right now year to date. So you kind of have to keep it in perspective again, as we like to do.
What do you think the logic is for some of these CEOs to look at it? I mean, the way I would see it is like, this could go a lot of different ways still. We still don't know. Like, for example, Trump could come in and say that, I cut a deal with X, Y, and Z, and I'm coming down on China a little bit because, and declare victory of sorts. And then there's, he could easily do something like that. At the same time, he could, as he said last night, he said, well, I'm going to set a rate at 40, 50% in some of these countries, and then the tariffs could go up. And so if I'm a CEO, I'm looking at all this. We talk all the time, they don't have uncertainty or there's no visibility, but you're not going to go start firing people left and right in that environment. You'd be losing your best talent, or some of your talent, right? So you wait. So this could really go dramatically one way or the other, but not right now. So it is truly wait and see, it seems like.
It is. And therefore, you may not get those extreme numbers that you might be looking for to determine, hey, are we really going into a recession, even though some people feel like we might be, even though there's no particular evidence other than yesterday's GDP report, which we can argue about. But you're right. It may take a couple of months for this to work through to any kind of number. And as I always talk about is you can't just take any one number. You have to take more than, you have to take the preponderance of it and put it together. And some of this might be resolved before any of these negative numbers even really kick in. So the wise thing to do, as people learned after COVID that we're running businesses, then when talent was really hard to find, you don't want to let your good people go. Right. Maybe you let some of the not so great people go, but you want to hang on to them as long as you possibly can.
You might want to always be doing that, but just to be, in this environment, I think you're right about that. Mr. Perspective, we call him. That's Doug Flynn. So we all feel a little bit better. Calm down. There we go. See, everybody's calm. It's National Investing Day, Doug. That's what Charles Schwab says at the New York Stock Exchange. So happy National Investing Day to all those who celebrate. Thank you. You're welcome. Thanks for having us. So there you go.